All right, what's up, guys? Today I'll just be going over a few tickers on the watch list that I kind of like, or something that was really stuck out to me. Right now, we're just identifying key areas of liquidity. We understand that the market's in a huge sell-off given Thursday and Friday, and then we have a few tickers on the watch list that I'm trying to identify that are supportive in structure in terms of delta and gamma. And on Netflix, for example, we see price stop right here at 850. Something that I'm looking forward to or looking that's supportive in structure is 830. This is the only positive delta column that I would be like to pay attention to. We understand that market participants want to buy everything at a discounted price. So on the higher time frame, we're looking at discounted prices that which buyers will step into, and that's supportive in structure on the higher time frame on the charts. And we're using the data here given at GammaEdge for a higher confluence for these setups. So we see 830 supportive in structure, and then 800 would be my absolute bottom. We understand that we're in a negative gamma environment, so this gamma is very sensitive to these negative deltas. These negative deltas will increase in value significantly as we push through them. So we kind of have a weight above our heads as we push through this, but we can expect some sort of profit taking to occur given the given market dynamics and how things works. And if you were to put yourself in the shoes of these market participants that are holding right here 850, we see there's a significant amount at 2000, and I would expect to see some sort of support right here and some sort of profit taking occur when we get down to this level. So we see that we have a head and shoulders right here, and like I said below, we're trying to pay attention to 830. So we see 830s, this top of this order block. We see a run on liquidity, and we see an impulsive candle move down, and then we mitigated this order block, and then we kind of formed another one right here. So we see that this is a strong area of support. So I would like to see price come down to 830 and then see buyers step in again. But given the fact that we have that weight over our head, profit taking would occur momentarily, pushing price up, creating that lower high, and then continuing the trend back down. So 820 to 830 is an area of speculation that I would see be supportive in structure. Getting below this order block right here at 826, mark out 50% of this wick. On the smaller time frame, getting below this, that would be my area where I would stop out. I could not expect any more upside if we get a close below this. So zooming in, let's see. So 830 is important, and then getting below this right here, 826. I would just go ahead and from 830 to 826, I would just go ahead and expect that's that key strike. This would be out of the money. All those calls would be out of the money, and then we could expect them to remove their deltas off the table, and removing positive deltas off the table could fuel price to go lower. And yeah, so just pay attention to around this area, 830. And then let's look down. If you want to make that ride down to 830 and hop on some puts and then see if we make that run on liquidity, feel free to do so. We got Riot. All right, yeah. So I really liked Riot. And I think we go out to 2 week on this one. All right, so we got Riot. We see that we're at the bottom of the Drunken Sailor range. This white box right here, we're in a negative. We're in a negative delta and gamma environment. So as price pushes through here, the rubber band could only be stretched so far. We don't really see anything supportive in structure, but I would like to see some sort of profit taking occur. Key levels to pay attention to is $6 and $3. We see that there's not any significant speculation below this area. So as we push through to $6 and then $3, I would like to see $3 supportive in structure. But like I said, we don't know what's going to happen if we get this gap down, we get more fear in the market, and then we push below $6. So try to find $3 and see if buyers step in there is something that I'm looking for. See that we're kind of in this range right here, and then we have an order block that's formed from this run on liquidity on the higher time frame, 2 weeks, and we kind of get this this order block has been mitigated here, and then I don't really expect it to hold another time, but let's see. So we see 50% of this order block is right at $6 and this key strike right here. So as all these put holders above us are their puts are increased to their whole intrinsic value as that rubber band stretches so far. We could see some sort of profit taking occur here at $6, and we could see some sort of buyer step in right here as this has been the previous pattern that has occurred already. So we see a run on liquidity. Buyers could probably step in here, and then that would be supportive with the profit taking occur with the put. So that would be removing the negative deltas off the table, and this would be removing the negative deltas over our head. So this is just something that I'm paying attention to specifically around $6. See if this holds. If it doesn't, we could look for more downside, probably to around like $3.50, like I said before. So we see a run of liquidity right here, and then we get another run of liquidity. So we see $3.50 is supportive in structure if this is not. And the next one is Apple. All right. All right, so we see that we're in this drunken sailor range. We close at 187, getting below this to 180. I think 180 is very supportive in structure. I have no idea what's going to happen with the tariffs in place and the fear on iPhones and all that speculation occurring, but we see that we have a trend line that we have been, following for a little bit now. So I would like to see us respect this trend line. We have an order block formed here, a run in liquidity, and 180 has been a previous area. We kind of get an SR flip if given the fact that we found this as support area. We get a wick, we get a wick, we get a wick, we get a wick right here, and then we get an impulsive candle move back up. To continue this trend line, I would like to see 180 be respected. I think this is a good area for buyers to step in, given the huge discounted price if they have not stepped in before. And like I said, as that rubber band stretches, we could see profit taking occur on the puts, and that would assist us in that move upwards. But if we get more fear and we get a good gap down below this, I really don't have anything significant. And maybe 140. If 180 doesn't hold, I could see long term 140 being the next one. So 180, 172. 172 doesn't hold, I would be looking for 140 to follow. And then the last one is going to be Pepsi. All right, so we see that XLP is the consumer staples for this one. This is just the sector. Sometimes I like to look at the sector for confluence and see what's happening there, what's important, or what's an area of liquidity that we could probably potentially make a run on. So we see wick, 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 and a wick right here. So we get an SR flip. I'll just mark this out. And we get an order block, right? So I'm not really expecting too much further downside in consumer staples. So 76 right here is what I'm expecting. And then going back down to Pepsi. So we're just expecting like a $4 move down, right? And then for Pepsi, I'm looking at 145 to see how this holds up. We understand this is the bottom of the drunken sailor range. And then getting below this, but let's see what's on the chart. So we see right here on the 2-week time frame, we have a fair value gap. 50% of this is right around right around 137. We got this when you see buyer stepped in here, then they just ultimately gave up with the whole fear in the market. Everyone took their money off the table. So 140 is, you know, our next bus stop in which I could be looking for. And this is kind of lines up with the top of this fair value gap right here. So this is an area of liquidity on the higher time frame. Probably look right here on the daily. Yeah, so we see we got a little run in liquidity right here, right here. 140 has been previous support before. 138 would be my stop loss here. So getting below this, an hourly close below this area is something that I would like it to pay attention to. We'll see how price reacts to this level. 142, getting down to here. We could potentially get into puts if price stays where it's at before we get that gap down to 142. I wouldn't really hop on the down train until we see how price reacts to 138 to 140. So identify what's happening in this range and looking for a break below it is something that I would like to look for. So this is just something that, like I said below, we kind of got an SR flip before on the 2-week. Move this out of the way. So yeah, we'll see how this holds up. But if you guys have any questions, let me know. This is just my watch list. So we have Pepsi, Riot, Apple, and Netflix. I'll see you guys later.